Hey traders, welcome back to another episode of the Trading Coach Podcast. As always, I'm your host, Akil Stokes, professional Forex trader and trading coach over at tier1trading.com. I hope you're ready for an awesome episode because today we are going to talk about money, dollar bill, y'all, and a few questions that I had pertaining to it. One question dealt with how much do I need to get started? Another question dealt with when do I know I'm ready to trade live? And a final question or comment dealt with what type of money management system to use. So we're going to address all three, but before we get started, as always, do me a massive favor, hit that like button, share this on social media, and when you're done listening to this podcast, make sure you take a few seconds to leave me a rating and a review. Today, we are going to be talking about the topic of money. Cash rules everything around me. Cream, get the money. Dollar bill, y'all. For my Wu-Tang fans back in the day. But before we get started, because there were a few different subjects I wanted to cover when it comes to money, especially related to trading, just want to say that, hey, for you guys that are watching on YouTube, and man, there's been a lot of you watching on YouTube, which surprised me. I really don't want to upload these podcasts to YouTube because I feel like it clutters the channel and maybe overshadows some of the videos that I provide on technical analysis. But you guys come out, you watch them, and you leave comments, and keep doing it. Again, I don't really care. I didn't think that it would be so popular on YouTube as well, since it's simply audio and not visual. But if you are looking for a different place to watch it, for you guys that are new, please understand that this podcast is available on essentially every major podcasting and music playing site, in Apple Music, iTunes, Spotify, SoundCloud, Stitcher, iHeartRadio, Google Play, many others. So feel free to watch and or listen to them over there as well. But getting back to the topic of money, there were a few questions that I got underneath a few YouTube videos this week, and another question that came on the Twitter. And the first question was from a trader asking, Akil, how much do I need to get started in trading? And I knew where the trader was getting at, or at least I assumed where the trader was getting at. This is a common question. But my initial answer was nothing, zero. I said, you can learn for free. And that's the 100% truth. It's not a smart remark. I believe that obviously the first part of becoming an independent, consistently profitable trader is going through the training process where you're learning the skill, you're working on the skill, you're developing the skill, and hopefully mastering the skill. So way before you should even think about trading live or putting any type, even demo, right? Way before you think about trading demo, especially thinking about trading live, you should be focused just on the education. I think it's extremely difficult to focus on learning and actually trading at the same time. They both take so much energy that you're not going to be able to get everything out of it. So it's very important you focus on one and then slowly transition to the other. And you can learn for free, right? It's true. In this wonderful day, right? This is we are alive at one of the best periods in time. I heard Jason Greystone say this the other day in one of his videos, and I read this in a few books, where people have said that we're lucky, not necessarily because of all the things that you think would come into being lucky, right? We're just alive at the right time, right place. We're alive at a time where basically every bit of information that we would ever need is readily available to us at the click of a button. And that cuts down on so much time. Jason Stapleton, listened to one of his podcast episodes today, actually, and he was talking about Carnegie and how much he achieved in his life, and how when you look at it in a different light, right, he achieved even more than you would think because of, back in the day, right, where if I want to send a message to a potential business client, let's say, or a partner, I shoot an email, I give a telephone call, boom, I can get my answer within a minute or so. Back then, you had to write it up, you had to send mail, you had to wait for the mail to go out, you had to wait for them to read the mail, wait for the mail to come back in, and a simple question, a simple, conversation that in these days would take us minutes could take days and weeks and months. So it's just, we're so lucky in that aspect. But as far as learning, everything you need to know is there on the internet for you, right? Everything, there are places you can go to read about what trading is. There are places you can go to learn strategies. There's this guy named Akil that has this YouTube page that has over 500 plus videos in it. And I hope they're all educational that you can go and binge watch and learn that way. My partner, Jason Greystone, has plenty as well. There's nothing stopping you. You can even, we recommend a lot of books, right? I don't recommend doing this. I'm a fan of buying 2 copies of every book, one on audio, one hard copy. But you can even download the PDF file, illegally download the PDF file of many of these books as well. So there's nothing stopping you from learning. So for you guys that are using, right, going back to the podcast episode on fixed mindset versus growth mindset, for you out there that are using the excuse of, I don't have enough money to start, blah, 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 blah. No excuses. You can learn for free, and my mindset on, if you guys saw the wealth diagram I shared on social media the other day, you can always earn more money. So while you're learning, you can take the time to save up for your account. But I knew the trader was asking a different question. How much do I need to literally start? Even though, the first answer that I just gave you is the real answer. But the answer to that is a difficult one because it's going to be unique depending on you and your situation. Different brokers these days allow you to, these money hungry brokers, right? They allow you to start with any amount of money, basically. I've heard of people starting accounts with a couple $100. So I'm assuming there are brokers out there that will allow you to do it. So really to get some skin in the game, all you need is a couple $100. Now, here's what's important. What are your expectations of what you're likely to turn that initial investment into? I think the right mindset is, if you're going to start with a couple $100, I don't recommend it because just honestly speaking, you're more likely to lose it. So you might as well just keep that $100 and throw it into a different investment or put it somewhere safe and continue to save it until you're ready. But if you are going to put money into account, if you're that type of person that, is like Akil, I just got to have something in it for it to feel real. And I understand that. If you're that type of person, have realistic expectations about what you can achieve. Understand that your couple of $100 is in there just so you can get a realistic expectation, a realistic feel of what it feels like to have live money at stake. If you're going in there expecting to turn your couple $100 into a couple $1,000 and your couple $1,000 into a couple $100,000 and your couple $100,000 into a couple $1,000,000 in a very short period of time, you have the wrong view at what trading is. And again, with that mindset, you're most likely to go broke. So you can start with various amounts of money. However, I think the safest and the smartest thing to do, because think about this, the chances are you're going to fail. And I hope that you don't fail. Right? I hope that everyone has success in this world, that everyone gets to fulfill all their dreams and live their dream life. But unfortunately, reality isn't like that. And reality is people fail. And the reality of trading is more people fail than succeed. A lot more people fail than succeed. So the odds are stacked against you. So I would take the cautious approach and say, look, I'm going to invest in my learning. I'm going to keep this money to the side. I'm going to continue to save it. And then by the time I'm done learning, and the learning process can be a year-long process, right? A lot of people think it's weeks, right? It can be months for those who are very talented and ready. It can be years for those who are normal, to be honest with you. It took me a few years, and that's with being educated. While you're waiting those few years, right, put some money to the side and start saving up. That way, by the time you are ready, you have more than a few $100 to put into your account. And this was this leads into the next question. Another question was about how do I know when I'm ready to trade as far as rewarding myself with money, and putting how do I know when I should basically move from demo trading to my live account. And this question always brings me back to really, I don't want to call it a future goal, but a future idea, and something that we think about, or at least I think about it almost each and every year, and then I quickly shut those thoughts down. But when I get asked this question by our clients, I always tell them to treat yourself like a prop firm, a proprietary trading firm. And for you guys that aren't familiar, a proprietary trading firm is basically, it's a firm that trades its own money. So, for example, if let's just take the tier 1 founders, right? If myself, Jason Greystone, and Darren, we all decided to throw in, a couple $100,000 into a fund, and we started $1 million fund, right? When we bring traders in, you guys would be trading that $1 million, right? You're not managing money for other clients. You're trading the company's money. And this is actually something, again, we think about this every year of doing this, of putting some money together and giving the traders opportunity to trade it. And it's not from a perspective of being lazy. We're tired of trading our own money. Although from a business standpoint, if you can have others make money for you, that is the goal, right? That opens up a lot more time. But the idea is mainly to give traders an opportunity to grow their business, right? We've worked with too many traders to count, thousands and thousands and thousands from a lot of different places. And a lot of traders have become very skilled at trading. However, they don't have the capital to really make it into a career, meaning make it full-time or part-time. It can bring them some supplemental income, but they just don't have the capital to make enough off trading to kind of drastically change their lives. And we've always thought about, what if we can take these traders and put them in a place, right? Because we most of these traders stay with us for years. So we have a pretty good relationship with them. We trust them. We know their style of trading. It's not like someone's coming in like, hey, I've got this EA, let me work for you. I'm like, nah, no. But what if we had this place where we can say, hey, John, right? John Smith, how about we bring you into our prop firm, right? You can trade our account. We'll give you the money to trade, a certain amount of capital, obviously. And then we give you a certain kickback, right? A commission off your performance, right? That allows that trader to take this skill that he's worked on for all those years and basically put it into a job. He has a way to turn his skill into a business where he can start making money, and then eventually, that money can take the place of maybe a second part-time job that he was going to get, and eventually he can start funding growing his account more and more and more. And then eventually he can either, continue to trade for us and trade his own account, quit trading for us because he doesn't need it anymore and just trade his own account, or maybe even become a partner in the firm one day. Endless ways you can do that. But I always thought that would be a cool idea because it does give opportunity for those who are looking to do something with their skill of trading, just aren't in the position where they have enough capital at the moment to see any kind of life-changing benefit from it. But the point of that was, I recommend treating your trading like a prop firm. So when we do something like that, right, essentially you go through a few different phases, right? You go through an initial kind of demo phase, right? This is like your job interview where it's like, okay, John Smith, we're going to give you 3 months. We're going to give you some demo money. We're going to, obviously we track everything you do. Let's see how you perform. And let's say John Smith just kills it, right? He kills it in the first 3 months. We reward John Smith with a certain sum of money. So we say, okay, well, the maximum that we would give a trader is the ability to trade $100,000. Put a number up there, right? Because you're new, right? We still don't trust you yet, right? I've never just give a newer person a bunch of money to trade without them. I would never give them a bunch of my money to trade. Let's put it that way, without fully trusting them. We're not going to give you the full 100,000, but we're going to give you $20,000 of real money to trade with after your first 3 months. Let's see how you do. So we give John Smith the $20,000. John Smith kills it, right? He keeps killing it. Why? Because he's a tier 1 trading client. Why wouldn't he kill it, right? Oh, I couldn't help myself there. But he kills it. 3 months later, we say, man, John is really rolling. He's bringing in good profit, not taking a lot of risk. And we send him a letter or we meet with him, say, hey, John, you know what? Me and the partners, we've looked at your performance and we're now going to give you $50,000. Right. And John kills it. And eventually we give him the full $100,000 or even more, the ability to trade his own account. Right. It keeps going up, but it's performance based. And I would do the same thing with yourself as a trader. Right. After you make it through your forward testing phase or your demo trading phase, demo trading, forward testing, paper trading, all the same thing. Right. After you make it through that phase and you feel as if you're ready to go, give yourself maybe a quarter of what you plan on starting your account with. Right? So if you plan on starting your trading account with a $10,000 account, give yourself $2,500 to start off with and say, I'm going to trade this $2,500 for 3 months. And if the results are XYZ in 3 months, then I'm allowed to give myself the next sum of money and keep doing that until you have your full sum of your trading account. That way you limit risk, right? We all know that there's a big difference between live trading and demo trading. So if you can put yourself in a position where, if so, let's put it like this. If you're in a position where you think you're ready and then unfortunately you realize you're not, you've got some psychological issues that keep coming up and you make these dumb mistakes as soon as it's live money because you freak out. Well, at least now instead of blowing your entire account, your entire 10,000, you've only blown a quarter of that. So you can go back to the drawing board, reevaluate, reload, relearn, and you still have a significant sum of money that you can start your trading account with next time. Because don't put it, many of you are out there saying, well, Akil, that would never happen to me. I would never blow an account. I'm a demo king. I would never just all of a sudden switch when I go live. You'll see. It's a different game. I said the same thing multiple times. It's a different game. Again, we hope that it doesn't happen. We hope that we prepare you so that's not the case, but you have to prepare for that. And it's much better to be safe than sorry because, again, all you need is a chip in a chair. You blow your full 10,000 in your first month of trading, you've got nothing left. You blow 2,500, you can still re-enter the game. So the last topic I want to talk about, a little bit about money management. This comes from a message on the Twitter from my friend Ricardo. He sent out a random tweet. He said, Market Wizards gets better each time I pick it up. Market Wizards is a great book. One of the 3 books I always recommend every trader read. It is a study, a set of interviews by Jack Schwager, who essentially he interviewed the best traders of all time. And I love the book because it gives you confidence about yourself. You realize that all of these traders had different styles of trading. So there is no one magic way that you have to trade in order to be successful, despite what the internet will tell you, despite what those scammy people trying to sell you that $99 system will tell you, right? There's no one way to be successful. And B, all of these traders struggled. These are all the best traders of all times, and all of them, again, except for one. I think it was some French dude that didn't struggle. He's an outlier. Everyone struggled. So everyone went through a period of time where they absolutely stunk, yet they still were able to turn around things and become successful traders. I know when I first read the book, I was in a struggling trader phase where I was in that fixed mindset where it's like, well, I'm just not smart enough. I didn't come from this type of background, didn't go to this type of school. There's no way I can be successful. And it just kind of gave me a confidence boost that I can do it too. Kind of like the story for you basketball fans, Michael Jordan getting cut by his high school team, yet still going on to become one of the best players ever. Gives a lot of confidence to young high school players who get cut and, instead of giving up on their dream, refocus and get after it. But he says, Market Wizards gets better each time I read it. And then he said a quote. He put a quote in there by Marty Schwartz. Says, don't increase position size until you have doubled account size. He said, makes me wonder how many would have the patience to do this. And I shot him back a tweet, said, I agree, man. It does get better each time I read it because I've read it multiple times and I love it even more. It's like my wife. I love her even more each time I see her every single day. But what I don't agree about is the doubling your account size. I don't believe in that position sizing model. Now, I thought about this a little bit later in the day, and I put it on the Twitter, so I'm just waiting for like the blast back, right? I'm waiting for the trolls to get the scent of this tweet and just start firing back at me. Fortunately, none have, because trolls don't like me anymore. They've grown bored with me because I no longer argue. But I thought about it, and it really depends on your situation. And what I was doing is I was thinking from the situation of a retail trader, right? And basically, not increasing your account size until you double your account the first time through is an example of what's called fixed fractional money management. It's something that the big hedge funds use. And essentially, to give a very brief breakdown of it, because money management often gets confusing, fixed fractional kind of works like this. Basically, you're saying, okay, well, I'm going to trade one contract per every $10,000. So, again, $10,000 is just obviously a very small example to make the math easier for you, but one contract per $10,000, right? So when I get to $20,000, right, I'm going to trade two contracts. When I get to $30,000, three contracts, $40,000, four contracts, et cetera, et cetera. And what's kind of interesting about this is it makes changing your position sizing very, very difficult in the beginning and then too easy as you go through it. And here's what I mean, right? So when you're trading one contract at $10,000 and you need to get to $20,000 to trade two contracts, essentially you need to double your account, just what we talked about, right? How long does it take you to double your account? And I'm not talking about you guys that are, trading this inflated position size and you caught a hot streak, because you guys are just going to ultimately blow your money anyway. I'm talking about you real life traders out there. What is your average return? How long do you think it's going to take for you to double your account? A year if you're really good? 2 years, 3 years, right? Probably a little bit more realistic. It's going to take a long time, right? So you can be successfully trading for 1, 2, 3 years and never actually be able to increase your position size because you need a 100% return to get to the next level. And 100% return is hard to get. Now, once you do get that 100% return, right, here's the thing. It gets a little bit easier, right? Because you needed a 100% return to get from 10,000 to 20,000, right? But now to go to your next position size, all you need to do is get from 20,000 to 30,000 while trading a bigger contract size. And then to get from 30,000 to 40,000, even trading an even bigger contract size, then 40,000 to 50,000, trading an even bigger contract size. Eventually what happens is now, right, you're increasing your position size way too fast. So you start off where it takes a massive amount of time to increase your position size to the first level. And now you're increasing your position size basically on every hot streak. And of course, that brings a lot of risk because, if you had any experience like me, right, don't you seem to increase your position size right before a drawdown, then boom, that drawdown hits and you take double the loss because you've just bumped up to the next level in your money management, right? So as a retail trader, again, and it's a different game for hedge fund traders. When you're trading a massive amount of money, it's a different game because there's all types of flexibility per contract and per risk and all that stuff. But I'm talking for newer traders starting with a small sum of money. It's not a realistic way to go about it, in my opinion. That's why we always teach smoothed ratio or even fixed ratio money management. It's a lot easier to kind of get the ball rolling in the beginning, and then it kind of protects you from yourself at the end. So, yeah, 3 different topics of money, which I all thought were interesting. And it's funny how they all came kind of within the same 24, 48 hour period, which got my spidey sense tingling and saying, Akil, you must deliver a podcast on this topic. So there you have it. So I hope you guys enjoy. I hope you guys are a little bit more educated. And as always, make sure you make sure you share this podcast. Make sure you leave a comment if you're watching this on YouTube, and just continue to promote it. We've had this past week, as I'm recording this, we set a new high for weekly downloads. We've done that each and every week aside from 1 week. So that just tells me you guys are getting the job done. More and more people are listening to this podcast each and every week. That's exactly what we want as we continue to grow this tribe that has, well, a different idea of what trading actually is, right? We're trying to preach a different message, not a wrong message. I believe it's the right message, but it's not the message that most traders out there believe, that most traders out there want you to believe. Saving lives. I know it seems out there, but I truly believe that's what we are doing here. You guys won't believe how many traders out there are leveraging their lives to try and play this gamble that they think is the markets, and it's ruining themselves, it's ruining their families, it's ruining their loved ones. So if we can continue to preach the right message and just show people the reality of trading, hopefully it will stop some of that. That's my goal. I hope that's your goal as well. And as always, thank you for listening to the Trading Coach Podcast.